Can you get state tax deductions for 529 contributions? If you are curious about whether you can get state tax deductions for contributions to a 529 college savings plan, you are in the right place. Let's break it down in a straightforward way. Many states do offer tax deductions or credits for contributions made to these plans, but the specifics can vary quite a bit from state to state. First, it's important to know that while contributions to 529 plans are not deductible on your federal income tax return, most states with an income tax do provide some form of tax benefit. This is designed to encourage families to save for education. Typically, states allow taxpayers to deduct or receive a credit for a portion of their contributions to a 529 plan each year. However, there is usually a limit on how much you can deduct. For instance, some states allow deductions for contributions up to $5,000 per year for single filers or $10,000 for married couples filing jointly. In some states, you can contribute to any 529 plan and still qualify for the deduction. However, other states requiring that you contribute to their state-sponsored 529 plan to receive the tax benefit. It's essential to check your state's rules to see what applies to you. Another interesting point is that some states allow you to claim a deduction or credit, even if you use the funds right away for qualified education expenses like college tuition or K-12 tuition. This means you could potentially receive a tax benefit each year you contribute and pay tuition through the plan. Keep in mind that a few states have time restrictions on how long you need to keep the money in the plan before you can claim the deduction. Others do not have such requirements. When it comes to deadlines, contributions usually need to be made by December 31st of the tax year to qualify for the state tax benefit. However, some states allow contributions made by the tax filing deadline, typically in April, to count for the previous tax year. The amount of tax you can save depends on your state income tax rate and the maximum deduction allowed. For example, if your state has a 5% income tax rate and a $5,000 contribution limit, you could save up to $250 in state taxes each year. Taking advantage of your state's 529 plan tax deductions can help lower your state income tax bill while allowing your savings to grow tax-free for qualified education expenses. This makes 529 plans a great option for families looking to save for college efficiently. Always check your specific state's rules to understand the exact deduction or credit available, contribution limits, and any plan requirements.